within the context of what you deal with, define sustainable.
Sure. So I've learned over the years that it's not about my definition of sustainability, that I've stopped trying to push my definition. Instead, what I do is I've designed a series of questions to really get to the heart of what my clients' values are. Because everyone has their own definition of sustainability. And who am I to say that my definition is better than yours? And specifically, if it's your money, does my definition really matter? Right? So for me, it's all about what are your values in doing that. Now, I have a very sort of general definition. I can get into the specifics and the sort of scientific principles. But as a general overview, for me, sustainability is just about designing systems that can continue forever. And that if we have an activity that brings itself to an end, then it's not sustainable. The best example, is when it comes to natural capital and when it comes to something like fish stocks. Fish reproduce at a specific rate. If we're harvesting those fish faster than they're reproducing, we can't do that forever. Inevitably, at some point, we will run out. It's the same thing if we cut trees down faster than they grow back. That is unsustainable. Now, when it comes to the social system, it gets so complicated. I don't even know if I want to go there. We would be here for the next year talking about social sustainability. It's very fuzzy. And really, it comes down to individual and their different idea for what constitutes a sustainable society. But again, when it comes to the financial aspect, again, the math speaks volumes, which for me, it's really about levels of debt. And, really, the problem that we're seeing in our society is this idea of debt. As soon as your interest payments are more than the revenue that you're bringing in, then all of a sudden you're in a downward spiral. You can't continue that forever. So, in my head, I've got a really good definition as much as possible based on the math behind how quickly things grow versus how quickly things deteriorate. But really, I think that this is a question people need to ask themselves. And what does sustainability mean to you? I think is ultimately a more important question.
So you've spent the last number of years, in addition to working with clients, you've also done a number of reports, and obviously you need to know about your sector. So talk to me a little bit. I'd like to hear a little bit about a comment on the global, but also as local as you can get, either Canada or more specific, just about an overview of trends. What sort of things are going on?
Yeah, there's a really exciting movement towards this idea of big data. So we're now collecting data on things we were never able to collect, which is fantastic. But at the same time, it means sometimes we get a little bit overwhelmed with information. So a lot of my job is digging through the details and getting into the specifics, but then as well presenting it in a context that the average person can understand, that you can put into a 144-character tweet, which isn't always the easiest, but it's very important. From a global context, I'm the lead researcher on the Green Transition Scoreboard. This is something I do in partnership with Ethical Markets Media. They're based in Florida. One of my mentors, Hazel Henderson, she's been doing this for decades. And back in 2009, we were reading reports saying that we need about $10 trillion of private investment in order to kickstart a global green economy. And we're focused on this transition away from the dirty dinosaur fossil fuel-based economy towards a clean, green, renewable energy economy. And really that we need about $10 trillion of private investment to kickstart that transition and get it to the point where it'll just grow on its own. So that then begged the question, well, if we need $10 trillion, how are we doing? Are we getting there? How quickly are we getting there? So we developed a methodology for this Green Transition Scoreboard where we looked at 5 different sectors, and we've actually just added in a 6th sector this year, which is water. So the biggest sectors are by far renewable energy and energy efficiency, number 2. Then as well, green construction is a really big one, looking at LEED certified buildings, which is a huge trend in the construction industry. As well, you've got green R&D, which is research that I do myself. All the other data we take sort of from the best available sources, but no one's ever looked at green R&D. So I've got my database of about 300 companies, and I dig through their financial reports and get all that information. And then the last one is broadly defined as clean tech, which are much smaller companies, but looking at investment in things like venture capital, mergers and acquisitions. So when Google buys a big clean tech company, that's where that gets in. And as well as IPOs. We are starting to see green companies enter into the stock market with their initial public offering. So that's we look at the aggregate, and those are the different categories, the different sectors for our numbers. In terms of the trends, I mean, it's really exciting watching this stuff absolutely blow up. From a numbers perspective, renewable energy has actually declined over the past couple of years in terms of dollar amounts, but in terms of megawatts, it's gone up. So we're getting more green megawatts, but at a cheaper cost, largely due to the fact that solar energy has gotten cheaper faster than anyone really imagined. 4 or 5 years ago when we saw that solar prices, we expected them to decline, but it's happened so much faster than anyone imagined. And then probably the last trend that I think is really exciting in my mind is the rise of green bonds. Generally speaking, there'd be somewhere between about $500 million to about $2 billion a year of green bonds issued. And then last year, we saw an explosion up to about $11 billion of green bonds. And then so far this year, and here we are at the end of April, so we're about 4 months into the year, we've already seen $20 billion of green bonds issued this year. So on the macro side, those are the big trends. I mean, it's green bonds, it's that traditional investors are getting in on this. Warren Buffett issued a $1 billion green bond. More locally, we are seeing some action in this space. Unfortunately, Canada is quite a bit behind other countries, but we did see TD Bank come out with their first green bond just about a month ago. At the same time, what I'm really excited about here in Ontario is the rise of renewable energy co-ops. So we've seen a real explosion over the last few years. It's community-owned power. Co-ops are fantastic. I talk about them as sort of the original social enterprise. They've been around for probably centuries, but they do this great job at combining traditional financial models with positive social impact. So these renewable energy co-ops are springing up all over the place, and they allow investors like you and I to invest, let's say, $1,000 in a solar bond. At the same time, we can invest $5,000 in building a biogas factory or a biogas plant at the Toronto Zoo. These are incredible opportunities that I think the impact is much larger than just the money, because they really get communities and individuals involved. And, if you and I are profiting from solar energy, I think we're going to be much larger supporters of this transition. And I think as well, we're going to be champions. We're going to go out and we're going to tell the world. I'm proud of the fact that I own a solar bond, and I want to shout it from the rooftops. So the more people we can get engaged, I don't have Warren Buffett money, but I do have $1,000 that I'm saving for down the road, and it's nice to be able to invest that here in Ontario.
So we recently talked to Brad Zarnett, who's with the Toronto Sustainability Speaker Series, and one of the things that he brought up during our interview with him was this idea of social capital. We've talked about the money, but talk to me about just sort of people's attitudes and what effect that's having on the market. Yeah, I mean, social capital, it's one of the trickiest things to quantify. Again, the social definitions are so fuzzy, but it's probably the most important thing. When I talk about social capital, I talk about trust. And as it relates to the market, every company has some element of social capital or trust built into the price. I look at it in terms of the PE ratio, so the price to earnings ratio. And all companies, their share price includes this multiple, which is the expected earnings that we expect them to earn in the future. So when I buy a company like Tesla Motors, I'm not paying a price based on this year's earnings. I'm paying this year's earnings times a multiple, which is the expected earnings from future years. And that all comes down to trust. And if trust in companies starts to erode for whatever reason, we saw this with British Petroleum, right, BP, we see this with, anytime there's a major disaster, we see their share price fall. And it might not impact their earnings this year, but it does impact that PE ratio. So as companies abuse our trust, and whether it's Goldman Sachs, or whether it's, some of these companies, there are all types of examples of companies that have abused social trust. We see this having an impact in their share price through this PE ratio. So one of the aspects there is that you're touching on is people's is sort of the social license to operate, which is what you're talking about with that. The other angle of that is the idea of new economies, and I don't just mean new companies breaking into new markets, but things like the sharing economy, things like alternative models. So one angle on that is just the idea of bartering and all that sort of stuff. I'm more interested in getting into the idea of Zipcar. Can you comment on both, and then we'll pursue? Yeah,
I mean, so I love the idea of a sharing economy. I think it's fantastic. I think that an economy that is built on trust, that is built on love, is going to be the strongest economy. The example I always love using is something called potluck economics. So, have you been to a potluck recently?
I have.
And how many people were there?
6 people.
There were 6 people there. So if I'm a rational economist, right, I'm doing the math, I'm saying, okay, I'm one person, there's 6 people coming, I should bring enough food for one person. If 6 people bring enough food for one person each, we've got enough food for 6 people, it's optimized. But do you bring enough food for just one person?
Of course not.
Of course not, right? Everyone would look at me sideways. Yeah. If I just bring enough for one person, it's like, hey, what are you doing? How many people do you bring food for?
5 or 6 people.
5 or 6 people. And so we end up with, if 6 people each bring enough food for 6 people, we end up with 36 times as much food as we need. We end up in this world of abundance, right? Where we have more than we could possibly eat. And yet no one's angry about this. Right? No one feels upset that, oh, I brought more than my share, I contributed too much, so I feel like a sucker. No, and this is, for me, it gets to the heart of the sharing economy, that when we do share our own personal things, then all of a sudden it's this notion, there's this pride involved, right? And we feel good. I want to bring not only enough food so that everyone can try, but I want to bring my best dish. Right? And I love seeing this to extend to other parts of the economy. So whether it's things like clothing swaps or things like trade schools, bartering, all that stuff where I can bring my best skills to the table and trade for that, it's absolutely fantastic. When in terms of the other side of the sharing economy, which is more the kind of corporate side,
how so people have started. Zipcar, Tool Library, we've talked a lot about.
Airbnb is a great example of this, where it's wasted. If there's no one going to be in my apartment, I might as well put it up and see if I can earn a little bit of money. That stuff is fantastic, and it's extremely disruptive, right? So we're seeing cities crack down on Airbnb. Car sharing, definitely, in terms of, if you look at the big car companies, they don't like it because it means they're going to be selling fewer cars. The reality is that the economy has been disrupted so many times in its history, right? I'm sure, there were people that thought that the end of slavery was going to result in economic collapse. People thought when electricity came on board, all of a sudden that changed everything. Now we could run things on electricity. More recently, the internet. I mean, in the past 20 years, the internet has impacted every single sector. There's not a business in the world that has been left unchanged by the internet.
I was thinking in my head just of a mundane example of not to find one that didn't.
Yeah.
But the first one that came up that totally validates what you're saying was banking.
Right. And
which is, almost all
online
banking is online now.
Yeah, completely. So so these revolutions come every so often. And sustainability, in my mind, is the next revolution for innovation. That it's going to impact every company, every sector. And it's really interesting the way it's impacting some of these consumer-based sector. I think about, some basic things. I love the idea of the tool library. Because for me to go out and buy a power drill, how often, what percentage of the time am I actually using that drill? And even if I consider myself a handy guy, which I'm not, but even if I consider, I'm probably using it maybe, a few hours out of the week, right? And the rest of the time it's just sitting there in my garage. This is an asset that people could be using that's sitting completely idle. Same thing with a car. How often is a car just sitting in your driveway or in your parking spot at work? Even some people that rely on their cars every day, are probably only using it maybe 2 or 3 hours out of the day. Very small percentage of the time. So for me, the sharing economy, through examples like Airbnb, through examples like Zipcar, through the tool library, it's all about optimizing the assets that we have, right? It's all about using them more efficiently, right? And by sharing them, we can use the same asset to a much higher degree of utility. So as economists, we always talk about maximizing our utility, and put yourself in the perspective of the car. And if the car was perfectly rational, do you think it would be happy sitting in the spot for, 20 hours out of the day? No, it wants to be used, right? So from that perspective, it makes a lot of sense. Now, from the traditional economic perspective, obviously not a lot of people aren't happy about this. Your Fords and your GM and Chrysler they're going to see their sales go down as Zipcar becomes more prevalent. This is going to have an impact on GDP, right? If not everybody is buying their own car, right? Our GDP isn't going to be as high as it could have been if everyone buys their cars. So, it'll be interesting to see how the economics react to this. But it's incredibly adaptable. Our economy has adapted to every single disruptive innovation throughout history. It will adapt to this one. I think it'll adapt in really interesting and fun ways that, you know, we can't predict sitting here. But it's resulting in a whole new wave of innovation that for me is really exciting. As a consumer, I love it. It's driving my costs down. It's making things more affordable, and I don't have to worry about parking anymore.
Was it one of the, we've talked about the intersection of the sharing economy on the show a number of times.
Yeah.
But as usual, I've called you in for the actual expert opinion, not the out of my back pocket opinion.
Sure.
Which is that, so when we're talking about these things, because I have noticed them taking off a lot more ideas like tool library, for instance, just as one example.
Sure.
There's a number of them. We interviewed somebody from Joe 2 recently, which is combining some online aspects as kind of a slightly more VR, like character-based, kind of like Kijiji or something like that. All sorts of cool stuff. It seems like it's exploding out of the seams. Just the basic concept.
Totally.
Community gardens. I mean, you can go on and on and on.
Yeah.
So, I mean, these are things that people are desiring. They're seeing the advantage of it, and it's experiencing market growth, even if the market is sort of like in scare quotes.
Yeah.
So, if this idea is taking off, at what point, like, where does the friction happen? How does this plug into the traditional economy at some point? Does this collapse the traditional economy? What do you see happening?
I mean, anytime there's an innovation to this degree, there are going to be winners, there are going to be losers. They're definitely going to be losers when it comes to this stuff. If you're telling me that a company that sells power tools, you know, Black & Decker, I don't know the big power tool companies, but if they look at a model like the tool library, this is going to scare the pants off of them, right? Because it means that they're not going to be selling as much of their product, right? But at the same time, I think that there's a real opportunity here, right? And for me, when I look at these things and when I think about where it's going, I think the winners are not going to be the people who fight it and the people who resist it, but it's going to be the people who embrace it. So for me, I love the idea, why couldn't some of these companies set up their own shop? Right? And for me, it's about, I think the biggest transition we're going to see through the sharing economy is the movement away from selling goods and towards leasing services. Right? So if instead of buying a power tool, I can lease the service of the power tool when I need it, right? I'm going to be able, as a consumer, I'm going to benefit from that, right? At the same time, if the company can retain ownership of that product, now all of a sudden they're no longer have an incentive to design it for the dump. They want to design the most durable, longest lasting power tool because they're going to build it once, and if they can earn revenue by leasing it for as long as possible, that's fantastic. At the same time, you know, we get away more towards this idea of extended producer responsibility. Right now, it's kind of an anomaly if a company is willing to take back the product that I bought from them, right? But under this new model, if I'm leasing the service, the company is going to retain ownership. That means they now have an incentive to design the product in a way that it can be perfect, 100% recyclable. So they're going to take back that drill, and once it's no longer serviceable, they can break it down into its components, use those components to build the next generation of power tool, right? Their input costs are going to drop dramatically. So I see it as a huge opportunity for companies that can kind of move away from take, make, waste sort of linear model and move it towards more of a circular model whereby they retain ownership, right? And instead they're leasing the use of the product to their consumers over time. Does that make sense?
Correct me if I'm wrong, but it kind of sounds like you're saying too that we'll end up treating objects the way that, like, as an employee, like almost in the same sense. Like you're renting. I need a certain amount of your services. We're going to have it for this amount of time, and there might be benefits or these things included. But it's carrying that principle across to everything.
Totally. So just the way that we value humans beyond just the monetary gain that they bring, in the same way we can value our goods through the materials that they've got inside of them. Right? There is still that tangible asset. And for me, it's all about aligning incentives, right? And right now, the consumer-based society, right? It's all about getting consumers to buy it. We're going to market the hell out of it. We're going to get you to buy it. And then we want to design it in a way that it'll break down so that you have to buy a new one. Not too quickly, because then you'll get upset and we'll make angry tweets about us. But we want it to last just long enough that you won't be upset and it'll go to the dump and you'll buy a new one. Right? Now, all of a sudden, this completely changes the incentives, right? If they can start leasing these products, Then they want it to be long-lasting, made from recycled products, right? Get into that closed-loop system, and that's how they're going to maximize profits. But just like we saw, you know, to use your example of the banking sector, you know, banks that really resisted the internet and that were real laggards in terms of online banking saw a decrease in their customer base, in their business. But the ones who embraced it, who have adopted it, right, who have really built out and are leaders in that space, they're the ones that are going to make the most money from it. It's the same thing for this new sort of sharing innovation. The companies that embrace it, I think, are the ones that are going to be the most profitable.
So this is we touched on a number of interesting things, and I'm really excited. I'm obviously a huge advocate of clean tech in general. But what we're sort of getting at here seems to be that one of the fundamental mantras of the way capitalism works is economies of scale.
Right.
All of this, everything we've been talking about, seems to bump directly into that concept.
Right.
What's going to give? How does it give? You know, it seems like impending friction, like an earthquake, and it's like it's going to just shift at some point. That seems to be my point sitting here, but how does that play out in the math, I guess?
You know, so it's interesting. So when it comes to economies of scale, we talk so much about efficiency, right? So cost efficiency is rule number one when it comes to economies of scale. And the reason you want to scale up is to drive your per unit cost basis down so much. Now, all of a sudden, what we're talking about is a shift in the way we're looking at products towards their effectiveness. Is it getting the job done? And how effective is it? And how long will it last? Does it decrease in effectiveness over time, right? And how do we build things that are durable, right? That are sustainable? And so for me, it's really about that shift. And we're still going to need lots and lots of these things, right? I don't think, I'm not talking about the end of consumerism at all, right? But for me, it's just, it's understanding that instead of trying to maximize the scale and looking just at the quantity, now all of a sudden we can start to look at the quality, right? And that to me again is a big shift. For the longest time we've just been pushing the sort of how much. And now all of a sudden we're starting to see this movement towards quality and towards effectiveness and saying, well, how good is it at actually meeting our needs and wants? Right? And I think that as we make that shift away from efficiency towards effectiveness, away from quantity towards quality, I think there are huge opportunities from a purely financial standpoint. But at the same time, I think our quality of life is going to improve, right? Because the reality is that it doesn't matter what my quantity of life is. It really matters what my quality of life is. And those things, they're harder to measure, right? It's pretty challenging. They relate more to the social side of things. But I think if we can get it right, that's when people will really embrace this movement towards sustainability. That right now, I think what's really driving consumers towards the sharing economy is pure cost. We're cheap, right? I don't want to buy a car. I don't want to pay for insurance and parking. I don't want to pay for gas. So I join Zipcar and I buy a bicycle. Or maybe I join a bike share program, right? It takes away maintenance costs, takes away all these wonderful things. But I think what we're starting to realize as well is that there can be a real improvement in our quality of life as we move towards these things, the sort of intangible social benefits, right? Is there a camaraderie thing where, you and I are both member of the same car share, right? Oh, you took out that car, I took out that car a few weeks ago. Isn't it a sweet ride? Yeah. Some way of kind of bringing us together. And I think we're really craving that, as so much of our populations are moving into urban centers. We're building up, we're all living in these condo towers, we're losing this sense of community, this sense of neighborhood. And I think that people are really struggling with that on a social level, on a quality of life level. And so by joining co-ops, by joining sharing programs, by joining communities like the Center for Social Innovation here, it's bringing me that community that I wouldn't have otherwise. I can't quantify that. I can't put a price tag on that. But I can tell you that it's making my life so much better. And that's what I really hope that we move towards, that this discussion around sustainability moves away from the quantifiable aspects and where we can get into the qualitative improvements and just say, hey, let's enjoy this life. Yeah.
You said right at the beginning that when a client comes to you, you don't have a definition of sustainable because you want them to tell you what their values are and then you suit it to that.
Definitely.
So I'm sure this has happened to you. If not, just make it up for me.
Sure.
Somebody comes to you, let's say me, hypothetically.
Yeah.
I have $10,000. I don't.
Yeah.
I have $10,000, Tim, and I want you to help me save the planet.
Right.
Just tell me, what is the most effective way I can spend my arbitrarily $10,000?
Yeah, or well, invested, I'm assuming is what you're asking here. Yeah, so I mean, you know, it's a tough thing. I'm a big believer in diversification. Mm-hmm. So for me, it's the one free lunch in investing. Diversification benefits everyone. So, you know, for me, it's about how do we make it as diversified as possible within your specific constraints. Right? So what I do is I go through sector by sector and I'd ask you, you know, do you feel good about this sector? Do you feel neutral, like you're okay holding it? Or is this something that's unacceptable that you'll get rid of? And in doing so, that's how I sort of narrow the space. But that said, if I wanted to go to the deepest green clients, you know, that type of situation, when it comes to the bonds, really the best sort of greenest impact bonds when it comes to investors, specifically here in Ontario, are the renewable energy cooperatives. That is the deepest green on the debt side that you can come to. When it comes to the green equity side of it, so looking at companies, there are some exchange-traded funds, ETFs, that I love. These are baskets of companies that you buy. And there are two that I really love. One is called the PowerShares Clean Tech Portfolio. And this is a global fund that invests in companies that derive the majority of their revenues from clean technologies. The other one is based off the NASDAQ. There's something called the NASDAQ Clean Edge Green Energy Index Fund. These things are a mouthful. The ticker symbol is QCLN.
Of course it is.
And that's all of the green companies on the NASDAQ. So that's the really cool sort of tech side of things. You know, companies like Tesla Motors, like Solar City, like First Solar, you know, it's high on the technology side of it, but that stuff is volatile. It is risky. So like I say, you know, in a perfect world, these things should round out a much larger, more diversified portfolio. But those tend to be the sort of things that my really deep green clients get excited about and identify as, yeah, I feel good about that. And those are the things they brag to their friends about. You know, when Tesla has a really good quarter and the stock price goes up, you know, they can send out some messages to their friends saying, oh, don't you wish you owned this company? You know, that type of thing.